Every business model has a language, including trading. A lot of traders do not understand the market language. Technical analysis is a financial language. A candlestick is the medium through which the market communicates to the traders. A lot of traders do not understand how to read candlestick charts. If you understand how to read candlestick charts, your technical analysis problem is 75% solved. Whether you are trading Bitcoin, Ethereum, forex, stock, synthetic indices, once you understand how to interpret the financial market language, you have an edge. Join me in this video as I show you step by step how to interpret this financial market language using candlestick charts. And by the end of this video, I will show you how I take trade and the reasons why I take trade or why I will not take a particular trade, even if that trade is in my zone. Hello traders, welcome back to Finspoke channel, where we break down trading, money and mindset into simple practical lessons. If you are serious about winning financially, you are welcome to the family. Hit the subscribe button, tap the notification bell, and don't forget to leave a comment and give this video a like. Let's dive in. Each candlestick that you are seeing tells us four things. And the first thing is where the candle open and where it close, the high of the candle and the low of the candle. These are the four things, four primary things each candlestick tells us. Now, the body of the candle as well has an information it is communicating to us. Pay attention to this video. It will help transform your trading life. A bullish candle, a bear candle stick, or a sell candlestick opens up like this one that is having high. When it opened, it moved high, got to this point, and was pushed down before it started coming down to close at this point. What this simply means is this market opens here. That is where the buyers or the sellers are. There are buyers who pushed the market, the price up. The sellers drag it back to where they overpowered the buyers and now push the price down. When they push the price down, they push the price down to this point. The candle closed here. But what this is saying to you is this: there are buyers here. That's what it's saying. Buyers are here at this point where this candle closed. That is why you have this wick and you also have wick here. So this is the lowest that this candle got to before it closed, and this is the highest that the candle gets to when it opened. That's the information here. The close of a candle carries a very big information. So for a bullish candlestick, it opens below, that is here. When this candle opened here, the sellers push the price down to this level. That's the lowest the price got to. and the buyers pushed it up, overpowered the seller. This is the point where the sellers are. Overpowered them and pushed the price up. They keep pushing the price up to this level, which is the highest, the high of the candle. Then the presence of the sellers appeared or stepped into the market, pushed the price down to this point. This place where this candle closed is where the sellers are. So they pushed the price down to this place. But they couldn't push further and the candle closed here. So these are important informations that this candlestick is telling us in the market. If you understand these basic things, technical analysis become much more easier for you. The shape of each candlestick is communicating an important information, or is communicating a message which you as a trader should pay attention to. For this particular candle, what it is telling you here is that the price open here and move straight with full force. That is what we call it. We call it momentum candle, with full force, and get to this place and close. And for this particular candle, it means that the price open here and go straight up and get to this point and it close. Simply put, there is momentum in the market. It signifies market sentiment. Understanding the language of this market is very crucial. For instance, there are some certain candlesticks that I will see, and I will know that the market wants to change direction. If I see these candlesticks, I will know that it wants to change direction. This candlestick is called shooting star. What actually happens here is that for this particular candle, it opened here and pushed up, and the seller or the bears pushed it down and it closed here. This is the point where the bears are in the market. They are at this point where the candlestick closed. And in this particular case, the candle opens, pushed down. So when you see this candlestick at the key levels, the market is actually telling you, or the candlestick is telling you, that market wants to change direction, either from the bearish to the bullish, or from the bullish to the bearish. It is called shooting star. It is a possible reversal candle when you spot it, especially at the higher time frame. I want you to understand something. If the price is moving up, that price is going like this, moving up, and you spot this shooting star around here, and you spot the shooting star around here with bullish color, just like this, what it means is possible reversal if it appear here with a bullish color. But if it appears here bearish, just like this, the message is communicating to you is that reversal already started. What I want to point out here is this: sometimes we are at the right zone, but the reason why we lose money is because we didn't get into the market at the right time. These are two different things. Market is in your zone, but you get into the market at the wrong time. Market is also in your zone, and you get into the market at the right time. That's the difference between the one who gets analysis correct, have patience, read the market language, understand the market language, and venture in to take what he or she wants and get out. If this information is helpful, kindly subscribe to this channel, give this video a thumbs up, and share it. Now, the same as hammer. This is hammer. When it comes after the price declined or the price dropped, the buyer came in and pushed the price back up, and it closed here. For hammer, we have something like this. Let's say price declined to this point, and at this point, the hammer appeared. This candlestick appeared, usually bullish. So what this means is this: the price declined down to this point, and the buyers came to push the price up. At this point is where the candle closed, showing that the buyers are here. So this is a possible reversal to the upside. When you see this at the key level, the possible reversal is to the upside. That means the price will start to appreciate because the buyers get into the market. And if the price is doing something like this, so if the price is doing something like this and the hammer appears here, this is a possible reversal to the downside. But there is something I want you to pay attention to when you spot these candlesticks. Just one, in most cases, is not enough. Pay close attention to these candlesticks at the key levels, either the support level or the resistance levels. When the market starts moving sideways, giving you something like this, being shooting star, doji candle, gravestone, indecision candles, all of this. Understand what the market is trying to communicate with you. These are candlesticks that shows or indicates when a reversal is likely to occur. The market is approaching a reversal level, whether price is trending up or the price is trending down. So it is crucial for you to understand the message that these candlesticks are passing to you. Usually, a lot of traders, the moment price gets to this zone, they will enter that trade. But for me, I will not enter the trade immediately. For me, I will wait for the price to come back to this zone before I will take that trade. So if the price came to this zone the first time, I will not take the trade. I will watch to see what happens. If it comes back the second time, I will take the trade. That is one scenario. And in the case of trend line, if I have something like this as my zone and the price come, the first one here, touch this place, goes out, I will not take it at the first touch. If it comes the second touch, I will not take it the second touch. I will wait for it to come the third touch. I will consider taking the trade at this third touch, knowing fully well that the price is respecting this trend line. Understanding how a candle close means a lot for me, either to take the trade even at this point 3 or at this level or at this level or not. If price touch this, get to this point 3 or touch 3, and I jump into the trade, and the market will bounce me out and still go to my direction, the price might want to take out liquidity, break this trend line, clear liquidity here before going up. So I need to understand what is happening at this point. If there is a momentum at this point, I will want to wait. Getting to the zone is quite different from entering the market at the right time. What pushes traders out of the market and the price still come back to go to your direction is when you get into early and you don't have enough liquidity that will sustain you for the market to go to that direction, that your direction. So it will just hit your stop loss, bounce you out, and reverse to go to your direction. That is why you need to understand how a particular candle close before you take the next move. You could be right with the zone, but wrong with the entry time. Get the timing correct. Get the zone correct. Once the zone is correct, the timing is correct, you are good to go. When a market gets to a zone, I want you to understand there are certain conditions that the market needs to fulfill before moving out of that zone. It could be to take out liquidities, could be to make some corrections. Take this as an instance. But I want you first to understand that when a market gets to a zone, there are certain conditions that price needs to fulfill at the zone. So when we have something like this is the candle that leads to the zone and is nicely closed. It's a bullish candle. There's no need for me to jump into this market. Or if I am faced with this kind of scenario, there's no need for me to jump into this market. If I do, thinking that my liquidity will carry me, the truth is that it's possible for me to lose and the market will still come back to go to my direction. So I will patiently wait. Reason is because the market is still on. This candle opens here and it goes straight to this point. If you have been following me from the beginning of this video, and it closed here. What this means is that there is still pressure in the market. So there's no point for me to start selling immediately. I will step aside and observe what is happening. If I see a candle that closes beside it like this, bearish, I will sell, because this is an indication or that sellers are around the corner. If I also see a candle that entirely engulf the bullish candle. If I also see a candle that engulf or that swallowed or engulf this bullish candle, at this level, I will also sell. So these are the possible conditions I will sell. If I don't get a signal, a bearish signal at this level, I will not sell. So I watch how a candle close. You know, a bullish candle opens down and close up. So the possibility of this one close and another one opens here too and still close up, and another one opens here and still close up is always there if you understand the analogy of a candlestick. If the price also close with a long wick, I will also sell. When it comes to the zone, I will sell. But there are also possible scenarios where I would not want to take a trade, either to buy or to sell. If I see something like this, at this supply zone, I will not sell. This is indecision. The market have not decided. So at the end of the day, it might decide to range a little bit and they continue the move upwards. So if I see something like this, I will not sell. I will wait. All right, let's say the candle open here, move up, and now start pushing down. Get to this point, the buyers push it up and it closes here. So what it means is that buyers are still in the market. The market have not really decided. That's the information the week is telling you. So that's the main reason why I have to wait. And this one, there is a week. So the market is trying to decide at this level, either to continue going up or to reverse and start going down. So it's not all about getting to the zone. It's about the right timing into the market. So at this range, they still have some significant control. If the sellers are still have some significant control, what it means is that they can push up more, come and clear the stop loss here, hit your stop loss. That is by taking liquidity before they will start pushing down. The sellers will now take control and the price will start coming down. If this video is helpful, if you value this information, please encourage me to keep bringing out this free information by subscribing to this channel. Leave a comment below, give this video a like, and please share it. Till I come your way next time.